Hey there, traders. David Floyd here with Aspen Trading Group. It's Thursday, June 27th, and it's time for another weekly video update. I'm going to do two things in this video this week. I'm going to do a little bit more of an educational component, but I'm also going to end up with a actual trade component, or using that educational aspect to come up with an actionable trade or trades. And as you'll see, there's a couple of different scenarios that I'm going to outline. So let's go ahead and get straight to it. I'm going to actually take my face off a screen right now so we can focus exclusively on the charts. So just give me a second here. And there we go. Voila. So what we're looking at here is a chart of the dollar index. And this is a daily chart. And as you can see, we've had a break lower in the dollar index over the last couple of weeks. And that may very well usher in a period of sustained weakness in the dollar index. And of course, given that the dollar index is inversely correlated to the euro, that would mean that the euro would move higher. You could also make that same argument for some of the lesser correlated currencies to the dollar index, which would be like the Australian dollar, New Zealand dollar, dollar Canada, although that's positively correlated with the dollar index. But I'm going to focus on the dollar index today in the euro. But what I want to focus on from an educational standpoint is basically knowing what you do with this information. And I think you have to ask yourself two questions. If you just looked at this chart, you have to ask yourself two questions. What's the type of a trade duration that I would normally take? And everybody has their own definition of that. They're either a swing trader, a day trader, a long-term investor. Make sure you clearly define where you stand on that spectrum. And then number two, what's your risk tolerance on a per trade basis? Because you can have the right forecast, but if you nail your entry point just a little incorrectly, it's going to make that trade perhaps less palatable, may not even work out even though you get the direction right, or you're going to have more of a drawdown than you care to have, or perhaps even should have if you were a little bit more precise. So let's start at the most basic and let's say big picture view here. I'm viewing this as a potential reversal lower in the dollar index. I have this labeled as wave 2, and I'm going to put this out to a 2-day chart just so you can see my logic here. I have wave 1 bottoming out in February of 2018, and then a wave 2 completing up here on May 23rd. Now I'm using the Motive Wave charting platform, which makes Elliott wave analysis a lot easier, as well as Fibonacci. And those of you that have been following me for a while know that wave 2s will typically retrace about 61.8% of wave 1. So using Motive Wave, it's really simple. I just click on that wave sequence of 1 and 2. I right click here on that dotted line. I simply do my ratio analysis, and it automatically draws in my fib ratios. And as you can see, looks as though wave 2 completed just above the 61.8% retracement of wave 1, which is typically where you would see wave 2s stall and then reverse. So we've got a situation here where not only were some minimum Fibonacci upside targets met, but you had a corrective pattern that unfolded very well, and then for the last first part of 2019, you've had very choppy and overlapping price action, which is indicative of some sort of a topping formation. So that's how I'm viewing it on a big picture basis. And then what I start doing, I'm going to go back to a daily chart. Then I start drilling down, and I'm looking at this price action. We break this trend line on this most recent thrust down, but we have a 5-wave move lower, another wave 2 move up, which oddly enough is 61.8% of this wave 1. And now we have another thrust lower in what is presumably this green wave 3. So the question you're asking yourself now is, okay, it looks as though this newly established move lower in the dollar index is intact. I want to be a participant. The question you have to ask yourself now is, am I looking out several weeks, several months, or am I looking at it over the next couple of days as to how I'm going to be positioned? If you're looking out obviously a few months and you're not currently, let's say, long the euro, or even if you wanted to be short the dollar index, probably not the best time to be doing that, just simply because we're probably in the midst of a correction higher. And this is why choosing your time frame is so important. It's really important if you're kind of a near-term trader, you're looking out several days, maybe a week or so. Shorting the dollar in here is probably not the best bet because I'm going to drill this down to a 4-hour chart. We've already had one leg down in wave 1, we've rallied in wave 2, and then we've completed what appears to be wave 1 of wave 3. Therefore, at minimum, we're likely going to get a correction back higher, maybe to test the underside of this trend line, or possibly go all the way up to 97. We're currently at 96.23. I, for one, if I know that that's a possibility over the next several days, I'm going to be patient and scale in. I'm going to be a scale-in seller of the dollar index or a scale-in buyer of the euro, which is the chart that I'm going to show you next. So knowing what your time frame is and what your risk tolerance is, if you're looking for the euro to break higher in the next couple of days, may not happen. Doesn't look as though the dollar index has completed this correction higher. So if you're more of a short-term oriented trader and you, let's say, got long the euro today, you might be disappointed for a few days until that turns around, and maybe that would have been too long to be in the trade. Maybe you set your stop loss too tight. So what I'm advocating is know your time frame, meaning your trade duration, and then know what your risk tolerance is. If you're getting, let's say, long the euro, and let's just pull up the euro chart because you think the dollar index is about to roll over again, are you prepared for it to possibly head down to 1.132 before it moves higher? I don't know the answer to that. Maybe you are, maybe you're not, but that's what the possibility is over the next couple of days. It's entirely possible that this correction is not complete yet. It's certainly a correction, but it doesn't look complete yet. I think we still have one more move lower. So again, if you're a shorter term trader and you're getting long the euro here, you better realize that prices could in fact, I'm going to bring this up to a 2-hour chart, could in fact drift all the way down into here, yet your forecast is still right, but maybe you're not prepared for a move to go quite that low. I, for one, and this is what I've been advising Aspen clients over the last few days, we're flat the euro in here. I take that back. We have a very small position on from last night at 1.1356, but it's a small position. I just want to have something in the event that this correction doesn't develop much deeper. But I'm fully aware that prices are likely to still drift a little bit lower, and then I want to start scaling in and being a buyer into this Fibonacci zone in here. I'm fully expecting prices to go higher from here. Now again, turning back to using the Motive Wave platform in the Elliott Wave and the Fibonacci routines, let's say we do get wave 2 to come all the way down to, let's say call it the 112.75 level, and then we begin to move higher. Well, then we know what our basic minimum upside objective is, because what we're going to do is we're going to use the software to measure the length of wave 1, project that from the end of wave 2, which again we're just assuming at this point is, let's say, where I have it drawn in right here, at about 1.1275. And we know that wave 3s on average will typically move about 100 to 161.8% the length of wave 1. So that's going to give us a minimum, and I emphasize minimum, upside target zone of 115.40 all the way up to 116.85. So if we're fortunate enough to be a buyer into here, prices stall and begin to move higher, I want to be selling into this area. Now the beautiful thing about the Motive Wave platform is it allows me to draw all these labels on the chart, use these price projection tools without the laborious effort that you have to do on other charting platforms. Other charting platforms, you've got to individually label your chart. In Motive Wave, it's a whole lot easier. You go over here to the main toolbar, you bring over an impulsive move, and then you just drag it onto your chart and drop the labels where you'd want them to be. Couldn't be any easier to use. So, to kind of recap, what we're looking at here is that the dollar index looks as though it's about to embark on a sustained move lower. I'm going to pull up the daily chart. I see prices potentially going all the way down to 94.70. Give or take. We're at 96.23 today. That would be my forecast over the next several days, few weeks. That would be the ideal situation. We'd unfold in another 5-wave pattern to come right down into the 94.70 area. If that happens, euro moves higher due to the inverse relationship. It's pretty straightforward. Doesn't get much more basic than that. Now regarding the MotiveWave platform, I'm just going to put this out there because the folks at MotiveWave are doing a summer sale that begins on July 9th and runs through the 17th, I believe. 20% off. You can lease the software or buy it. You can lease it for as little as $29 a month. All I can say is that I've been using this software for over 10 years, and if you are truly interested in getting better at Elliott wave analysis, or even if you're an expert in Elliott wave analysis, this makes the whole process a whole lot easier. The link to take a trial to MotiveWave ahead of that summer sale will be at the bottom of this video in the YouTube comment section or on the blog post, wherever you're viewing it from. I'll put that link there. Highly suggest taking a look at the software. It just saves you a ton of time and makes it a whole lot easier. One other thing I want to stress also with the euro, I've been looking at some options data here on the Bloomberg terminal, and I'm looking at the risk reversals here in terms of the euro. I'm looking at 1 week, 1 month, and 3 month time frames, and as we can see, they're all heavily skewed up towards owning calls. Now again, this is not a bona fide, etched in stone forecast, but it does suggest that the underlying bid in the market is to be long. Or of course, it's the underlying bid. The underlying view in the market is to be long the euro. So given the fact that we have that kind of lining up with the weaker dollar index, the strong technical pattern of the euro suggests to me that the euro will continue higher in the days and weeks ahead. You just got to be patient, pick your spots, set your stops at reasonable levels, and let it go, and then manage the trade accordingly as it unfolds. This has been David Floyd with Aspen Trading Group. Have a great trading week, everybody, and I'll be back in another week with another video update.